I'll go through this in a jiffy, but it's very relevant, right? So let me just highlight some of the important slides. What is stock price? Very simple: EPS into PE ratios. The way I describe it is art and maths, right? The left side EPS is maths, the right side is art. When I say art, it means PE ratios like the beauty of a painting, or the, you know, how you ascribe marks to a painting. You put a MF Hussain and you put any other beautiful landscape, and you ask 100 viewers, chances are 99%, 99% people will go for the beautiful landscape. But it's just that art connoisseur who will identify an MF Hussain and give it that price, right? That's P ratio, right? That is the difference between somebody trying to give a TCS a 10 PE versus somebody giving a 20 and maybe long only FI giving a 30 PE. अब वो दुनिया ही बदल जाती है अगर कोई 30 PE दे रहा है और कोई 10 PE दे रहा है, आपका नजरिया बदल जाएगा. And this is what TCS. Imagine a company which is much smaller and has a much lower history, right? EPS हमारे कंट्रोल में है, earnings हमारे कंट्रोल में है. कंट्रोल का मतलब है visibility. Let's have more control, more confidence on EPS, and if that be the case, market अपने आप PE के through reward करेगी. Very important slide that I'm going to be showing you next. We've always heard of time in the market versus timing the market. I'm introducing a new concept, which is time in the market versus chasing returns, right? Let's see what it means. किसी भी पोर्टफोलियो में हम जब एक्सपेक्टेशन रखते हैं कि कितने से ग्रो करेगा, दो बड़े वेरिएबल्स होते हैं, रेट ऑफ रिटर्न और टाइम फैक्टर, राइट? इसमें से आपको पूछना है अपने आप से, आपके ज्यादा कंट्रोल में क्या है, रेट ऑफ रिटर्न या टाइम? हमारे हिसाब से वो टाइम फैक्टर है. रेट ऑफ रिटर्न बदलता रहता है, कभी आपके फेवर में होता है, कभी आपके अगेंस्ट में होता है. टाइम इज समथिंग जो ज्यादातर 90% ऑफ द टाइम आपके फेवर में रहेगा. What do I mean by that? आपको 1 साल के लिए इन्वेस्टमेंट करना है कि 3 साल के लिए करना है कि 5 साल के लिए करना है. एंड एक बार अगर आपने तय कर लिया कि मैं 3 साल के लिए रहूंगा, डू यू डिविएट फ्रॉम दैट बाय ट्राइंग टू बुक प्रॉफिट? वो 3 साल का आपने 1 साल कर दिया, राइट? या 3 साल का आपने 3 महीने कर दिया, वो आपका रिटर्न इतना जल्दी आ गया. पिछले साल FY21 में लोगों को इतना शानदार रिटर्न है, प्रॉफिट बुक करो, टेक होम व्हाटएवर मनी वी हैव गॉट, राइट? वो टाइम बियॉन्ड अ पॉइंट वो उसका सेंस नहीं रहा, राइट? लेट मी प्रूव इट टू यू. Let's look at the right example, right? The example on the right hand side. What it says is, एक आदमी है जो 20% रिटर्न ऑलरेडी उसको मिल रहा है, right, on his portfolio. He's not trying to chase 30% return. No problem with trying to chase high returns, right? But when you chase high returns, it comes with its own set of risks, right? Portfolio management risks, which probably you would appreciate and understand more when you've traveled that journey of doing that portfolio construction year after year for many years across cycles, right? I'm sure many of you would have done that, but we are just sharing for it is more for people who have been in the market only in the last couple of years, more specifically the last 1 year. So there is a person who's chasing 50% more return, which is 30 over 20. 50% more return हो गया ना. 100 रुपए पे आपने 20 रुपए कमाया, 100 रुपए पे आपने 130 कमाया, राइट? 10 रुपए additional that you have earned on a 20 is 50% more return, right? Compared to someone who's in the market for 4 years, right? और वो बोल रहा है नहीं यार 4 साल की जगह let me just deploy it for another 2 more years, which is 50% more time. You look at the end result, it's largely the same. 100 becoming 299 after 6 years on 20% compounding, and that same 100 becoming 286 on 30% compounding after 4 years. हमारे कंट्रोल में ज्यादा क्या है वो आपको फाइंड आउट करना है. आपको लगता है मैं 30% ग्रो कर सकता हूँ ईयर आफ्टर ईयर फॉर मेनी इयर्स, राइट? Okay, you can go ahead and take that approach. Again, 20 and 30 here is just a illustration, right? It could be a 30 and a 45, right? It could be 40 and a 60. It could be 10 and a 15, right? It is only for आप खुद का अपना चेक कर सकते हैं आपने कैसे किया है. 20 to 30 to us it looks a very reasonable range in which one should expect portfolio returns to be there going forward. That's why we've chosen this example. I hope I was able to put across this point. Time is of essence. That is what is more important. Very amply understood in this example and subsequent, which is Bajaj Finance. Again, a disclaimer: some of the stocks that we would be discussing here would most of our clients would hold it in their existing portfolios, um, and therefore we would have a vested interest. But let's use it more as for educational and for illustration purpose, and not as an idea that we are recommending today. So Bajaj Finance, over the years, you look at the compounding in those 5 years, the those buckets of five years that it has grown. In all of those 5 years, sorry, especially the last three buckets, the price compounding has been between 40 and 77%, right? And 40 and 77% means, the stock is up 100x in the last 12 to 15 years. That's the kind of impact or benefit one gets if one decides to stick around for a longer period of time, right? That's the point I was trying to make there. Same is the case with Bojo Paints. The price has compounded between 33% and 41% in the last 12 odd years, in those individual buckets of 4 years, and it is backed by profit growth of close to 20% compounding. So the longer the time you stick around, you put that as a focus area and not the returns, you'll see the magic, and it'll play out beautifully. This is something that a portfolio we just wanted to highlight again. You might say Berger and Bajaj are obviously large, well-known, widely held stocks. The Deepak Nitrite we just wanted to highlight is something that, again, it happened very, very fast. It has delivered over 500% return, which means it's over 6x versus what we recommended 2 years back. It's still live in many of our portfolios, but the larger point I'm making again here is that there was many times when the investors, we used to get queries, should I book profit? 100 has become 200, or 100 has become 300, right? If at any stage if we fell into the temptation of trying to book a profit of 100% or 200% or 300%, believe me, this 550% would not have been possible, right? So the point I'm making is, please allow time, please allow compounding to play the important part which it has to play, rather than trying to chase. We still believe chemical sector, specialty chemicals, has a long way to grow, right? And we have in some of our existing portfolios, we have some of the other leading well-known top 10 chemical companies, and we also continue to hold Deepak in some of our other portfolios. We continue to remain positive. Point I'm making is, focus on time as much as returns. Somebody were asking me, we get a lot of questions, what are the themes to play? So according to us, most of these tech spaces like a fintech and edutech, a diagnostic, a financial inclusion, which means insurance, online shopping, a platform business, which is what you'll see a lot of companies getting listed in the next 12 months, like a Zomato, Policy Bazaar, probably one of the cap companies as well, maybe in Ola. So that is another interesting space. Electric vehicles, definitely yes, and nutrition, home care, yes. Again, have you started your journey, or you are just you have just started, or you want to increase your ticket size, or you're sitting much on cash? How should you look at it? Our approach is, our suggestion is key long-term focus, right? That's number one. Stay focused, which is again, as we saw in the first slide, trying to get those the frightening faces or those अभी आप नॉर्मल टीवी चैनल में देखेंगे तो ऑब्वियसली पसीना ही आएगा कि यहाँ पे इतने केसेस हैं, इतने केसेस हैं. Just try and stay focused, right? Bottom up approach. If one is more comfortable, in fact, at this stage, we would advocate is staggered buying, right? And trying to not time the market, but just allow it to grow over a period of time. This is the way we bucket our portfolios, which is all weather, the big banks, the large paint companies, the large NBFCs, been there, done that types. They contribute about 50% on an average of our portfolios. The momentums, the chemicals, the pharmas, the upcoming platform businesses, the ITs companies, they contribute, and off late some of the economy facing names. cement and metals. That's in that momentum. And third is where we look at, let's say something in a telecom, something in an infrastructure, right, which is including metals, some metal companies. That would be our circle of opportunity, as we call it, special situation. That would have about close to 10% weightage in our portfolios.